group policies, which means that if you have a policy that's from Reliance Standard, that means you got it as a benefit from your employer or you got it through an association. In preparation for today to discuss a little bit about Reliance Standard, we wanted to take a look at the revenues of the company to see how much they really do each year with regard to sales for group insurance products. And according to the data that we could find, they do over $1 billion a year in premiums collected for both life insurance and long-term and short-term disability insurance products. So there seems to be I would say an average amount of litigation, which means denied cases out there for Reliance Standard as compared to other companies. They're definitely not in our top 5 worst companies, and they're probably more of a middle-of-the-road company when it comes to evaluating claims and making decisions to either approve or deny benefits. And we've represented numerous clients that have Reliance Standard, and we wanted to discuss our most recent case and something that a lot of people who have these Reliance Standard policies should be aware of, because they have one of the most restrictive definitions of disability after the own occupation period. So I'm joined today by one of my law partners, Cesar Gavidia, and he's going to discuss the own occupation definition in a Reliance Standard policy versus the any occupation definition that we commonly see in most of the Reliance Standard policies.
Yeah. Thanks, Greg. We're going to talk about that in the context of the Janice McKeldin versus Reliance Standard case out of Maryland. Now, Ms. McKeldin was a registered nurse and nurse case manager for a doctor's office, and she'd become disabled due to fibromyalgia, deep vein thrombosis in her left leg, and also chronic fatigue syndrome. So she had a lot of difficulties standing, walking, bending, climbing for climbing and basically sitting and things like that for periods of time. And she filed her claim for disability benefits with Reliance Standard. She had, like most people out there, you said that they have a big presence in group disability. She was offered these benefits through her employer, and she, for the first 36 months, had met the definition of total disability, which was unable to perform the substantial material duties of her occupation as an RN. But what she didn't realize was that definition after 36 months changed to a very restrictive definition. And at first she saw it, and her lawyer saw it, as a very liberal definition of unable to perform each and every duty of any occupation. So they figured, well, if she can't perform even just one duty of any gainful occupation, then she'd be totally disabled. Well, of course, that's how they proceeded with their claims, and with her claim was ultimately denied. They appealed it, and they proceeded on that same theory, and Reliance Standard continued denying our claim. Now, they ultimately had to bring a lawsuit in federal court over this, since it was governed by ERISA, and the U.S. District Court in Maryland found that if they looked at and analyzed that definition by itself and isolated, the any gainful occupation definition, that it could be seen or read in more than just one way. It could mean that if she was unable to perform just one occupational duty of any gainful occupation, then she was totally disabled. Or it could mean that she had to be able to perform every one of them, unable to perform every one of them, those substantial material duties. The court then also looked at the partial disability definition. They said, in reading everything as a whole, because the partial disability definition basically would allow her to continue receiving benefits if she was not able to work full-time, was working part-time, or was not able to do as many of the duties as she did before. So in reading the policy as a whole and in complete context, they found that, in fact, that more restrictive definition is what applied. In several circuits, the Fourth Circuit and the Sixth Circuit have also found the same thing with the same exact Reliance Standard policy. So that's what people need to be aware of out there, and basically beware of this 36-month occupational change in their total disability definition.
And you said she had partial disability definition in her policy?
She did, yeah, for the first 36 months.
Was she was also approved for Social Security disability?
Yes.
So had she possibly after the 3-year mark or sometime close to that been doing some sort of other job and had a loss of income, then she may have been eligible to get paid under the partial disability provision of the policy.
Potentially, but the way that partial disability definition came up, it seemed like it almost applied to just the first 36 months. And after 36 months, basically, unless you were unable to do absolutely anything, you would not qualify for disability benefits.
Right, and being able to do each and every duty, that seems far more restrictive and that's each and every duty of any occupation.
And they gave examples that she could drive, that she could, use her arms and her hands, that she could walk a little bit, that she could read. They actually said that because she could read, that was still a material duty of a gainful occupation. So to what extent does someone have to be disabled? Do they have to be completely unconscious in order to collect disability benefits under this type of definition?
Right.
I mean, it's just kind of I think not what people expect and what they bargain for when they go into these policies.
Right. I think that's the issue we deal with every day when representing these claimants is we want to, if they can't work and can't do any job, how are we going to keep them on claim and prove to the disability insurance company that they're unable to do any work? And we know from having cases and seeing the case law, Reliance Standard really digs in when you have a claim denied, and they'll really want to litigate and take you the distance on cases. And we know from cases that have gone up to the Court of Appeals below the United States Supreme Court, and we know of the most recent case that went to the United States Supreme Court, which was the Hart versus Reliance Standard, where Reliance Standard was taken to court on a claim. They basically lost the claim because the claim was remanded, meaning sent back to Reliance to review again because the court felt they didn't review the claim appropriately. And Reliance was fighting on an attorney fee issue where even after the claimant had their claim remanded, Reliance said, no, that's not a victory. You didn't win. The court, because there was no benefits awarded, so that claim there was no win by the plaintiff. So you're not entitled to attorney's fees. And that went to the United States Supreme Court that only takes about 150 cases a year. And the United States Supreme Court rewrote basically the laws for what's required in order for an attorney to get paid on an ERISA claim, which makes it obviously better for the disability claimant, because if the disability claimant has got to pay their attorney for the entire claim, then basically the attorney's fees in a lot of cases could wipe out the amount of benefits that are payable. And fortunately, the United States Supreme Court came back and made some findings in favor of the claimant to make it a little bit more liberal for claimants to be able to have their attorney's fees paid for by the insurance company.
Yeah, and that's certainly a victory, because there has to be some disincentive for these companies, because if they don't see that they could potentially have to pay attorney's fees, or if they don't see that there could be damages just outside of paying benefits on these policies, there's really no incentive for them to even really pay the claims.
Right. They would just deny it and just say, if we lose, then we'll pay you the back benefits. And they can certainly afford, with billions of dollars in revenues, and especially $1 billion in just disability, they can afford to pay their attorneys all day long and deny claims. So if you have a Reliance Standard disability claim, or if your claim has been